Bloomberg Audio Studios. Podcasts, radio, news.
A bad day for Cava, but it's been an incredible growth story since it went public and before.
And we should point out, despite some of the results, this is a company that is still growing. And pleased to say, joining us here in Studio 2 in New York is the co-founder and CEO of Cava, Brett Schulman. Brett, great to have you.
Thanks for having me.
2.1% comp sales growth. The street was looking for almost triple that, basically about 6%. What happened?
Well, when you zoom out on a 2-year basis, our same restaurant sales actually accelerated from Q1 to Q2. And on a 3-year basis, we grew traffic 20% in the quarter. In the quarter specifically this year, we were lapping very difficult compares, including last year's launch of steak, which was our most significant protein in a number of years, which led to a more pronounced impact on the quarterly results.
When you say impact, that was on the bottom line, though.
No, on the same restaurant sales, so hurdling that high number. Yeah. On the bottom line, on the EBITDA and restaurant level margin, we actually, and EPS, we actually beat estimates.
But I am curious, when you say that it affected, was it that more people weren't coming in because of those offerings, or they didn't feel like you had the right offerings for them? What?
It was lapping the trial period. Marketing team did a great job. We had tremendous trial.
So
and
it's
then,
more about the comparison.
Yeah, more about the comparison.
Gotcha.
I'm looking at the 2-year stacked same-store sales growth on our MODL page here, and I see like eye-popping growth in 2022, 65%. Then in 2023, 35%. Then in 2024, 33%. And now our analysts are estimating 21% for this year and 14% for this year. So you see that trend is coming down. You can't continue to grow at the speed that you were. How do you deal with that as a public company?
Yeah, we've grown our average unit volumes from $2.3 to $3 million over the last few years. So those are very robust numbers. Huge, powerful unit economic model. We're free cash flow positive, funding 18% plus unit growth. So we're building a very robust culinary pipeline to keep that excitement, that newness, and then taking advantage of the massive white space opportunity of new unit growth. We've been growing about 18, 19%, over 400 restaurants now, on our way to our next target of 1,000 restaurants by 2032. So really delivering that powerful growth and unit economic model.
But I'm curious in terms of store openings. I mean, that also was a metric that came in below street expectations. And I am curious, was there any slowdown in the planned rollout heading into that quarter?
We actually raised our guidance for the full year to 68 to 70 restaurants. So we're going to outperform, over-deliver on the unit growth for the year.
When you grow that fast, can you continue to grow the operating margin? This is a metric that continues to get bigger and bigger and bigger every year, right? From basically nothing in 22 and 23 or negative to 4.5% this year, maybe 5% next year, 6% the year after that, according to the estimates I'm looking at. Where do you want to see that number?
Well, that's the power of the brand and the model, right? We keep steady, positive same restaurant sales over the long term. We continue this exceptional unit growth and really start to drive that exponential growth of EBITDA, of net income, and ultimately EPS and free cash flow. You know, we've been driving free cash flow this year, even funding that 18% unit growth. And that's the power of the economic model, while we, at the same time, we're bringing our Mediterranean cuisine to communities across the country.
There has been some debate as of late about just the business model of the type of fast casual, or I don't know how you want to categorize it. We had earnings out of Sweet Green, which has a kind of a similar business model to Cava. They're having some issues, and it's more about just the foot traffic, not necessarily just about costs and inputs and things like that, but the idea that maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
Yeah, we're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. So when you think about how much we've grown over in recent years, you think about how we've been able to drive our value proposition. So in recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests. So in January, we only took 1.7 incremental menu price adjustment, and we have no plans to take further price for the rest of the year. So continue to drive that overall value. And, you know, when you look at our day part mix, right, we've got 50% lunch, 50% dinner, roughly. Right. We work in the suburbs, we work in the city. We cook with fire, we roast, we grill, we braise. So people can come to us for dinner, they can get a great meal for lunch. And then with our channel mix, we have 65% in restaurant, 35% digital. So people are accessing us for a quick digital order lunch or to sit down down in the suburbs on a Wednesday night to have a great family dinner.
You said 1.7 though on the take, and I am curious. Does that mean that you expect that not to increase? Does that mean you don't expect any material increase in your costs and the cost of the ingredients or the cost of labor?
Well, that's a credit to our team, right? We're working to be more efficient and offset and mitigate that. Our restaurant level margin came in above expectations at 26.3%. So outstanding unit economics where we didn't have to pass along any of those impacts we're seeing from tariffs because we're able to offset it in other areas of the business.
I was talking with our lovely producer, Finley, while we were looking at your website, and she saw that little PETA keychain toy, and she said, I have to have one of those. And I actually talked to somebody on the desk over here, Bridget. She also said that they're really a hot trend. What's the story with that?
Well, I've got a couple Peter Chip plushies here with me that we can give to her after the take. But, it's a way for us to, again, build emotional connection. We launched Peter Chip on National PETA Day, and plushies are certainly hot, the little boo-boo craze. And it's a way for people to really connect with the brand and have a unique way to take a bit of Cava home.
One of the other things I learned from Bridget over here is that her sister is thinking about going to a Cava near like a big successful bank and grabbing somebody else's order so that guy calls her later. Have you heard of this sort of meet cute scenario?
I have seen this. I have read about it, especially in the city. And, I think Cava is a great place to meet someone. And that's what we're about. Human connection. That's why we're investing in our dining rooms. We've got Project Soul to really enhance our experience in the dining room. So it's a place you want to come down, share a meal, or maybe meet a significant other.
That's key. You don't want to just be like a salad conveyor belt.
No.
You want to have a place where people want to hang out, and occasionally, if they're not going to go back to the office, sit down and eat lunch.
Well, I am curious about that point, though, because there's been a lot of talk about how do you reimagine stores like this. Of course, Starbucks, which kind of moved to kind of a takeout model, is now sort of dialing that back and saying we want to be a place where people come and linger and sit. What do you want your customer to do?
Yeah, we don't think it's an either or. We think it's an and. If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk the line experience, see the food, smell the food, interact with our team members. Part of our brand essence is our Mediterranean hospitality. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
And maybe meet the love of your life.
Yeah,
that's right. There you go.
Over some hummus.
Making some connections there. Brett, thanks so much for coming. Really appreciate it. Brett Schulman there, Cava, co-founder and CEO.